welcome. You're watching Business Today Television. This is Market Guru, our special edition where we get you views from markets from the best of market voices in India, and this is for you to truly understand what is the best way to really approach markets at a time when the volatility is at an extreme high level. We are awaiting the general election results, which is the biggest event of the year, and what to expect from markets beyond it as well. So to help you with all these insights and many more, I've got with me today a very special person joining in on this edition. Mr. Gautam Shah joins in, the founder and chief strategist at Goldilocks Premium Research. Warm welcome, sir. Thank you so much for taking the time out for this discussion on Business Today. And this is for the first time you're making a presence on Business Today. And for viewers, let me tell you, I've already eked out a promise from Mr. Shah that he is going to make it a practice and he is going to be regular on the channel for you to get some fantastic insights on technicals when it comes to markets. So, Mr. Shah, again, very warm welcome to you. Do tell us, how are you reading into the current momentum in the markets? We have 22,700 back on the street. Is an all-time high coming?
Good morning, Sakshi, and thanks for having me. Well, I think the markets are unnecessarily concerned about what happens on the 4th of June. Yeah. And the way I see it, I think the markets are not going to be disappointed or excited. I think just like 2019, it's pretty much going to be a non-event. The markets are usually ahead of the results, and we've seen this in the previous elections. And I have had the experience of going through 2004, 2009, 14, and 19. And I've seen in those periods that every single time the India VIX goes up a month before the election results. That's because a lot of people take hedges, just trying to protect their portfolio in case of any unforeseen circumstances. But as I always say, the market is the best judge. And I think the way the price action has been for the last 10 days and the way some newer stocks are starting to participate, like ITC and Reliance, I want to believe that it's a matter of time before the indices hit new lifetime highs. So I think 23,000 plus is coming. The trend is safe. The momentum is good. The participation is excellent. And I think we are going to see better days. However, don't expect the Nifty to run away just post the election results. I think we'll go back to looking at global markets, global factors, our own positives, our own liquidity. So it'll be a very normal kind of a market environment starting 4th of June. But the key message is stay committed, be in quality stocks, you will be rewarded.
Okay, wonderful. So 23,000 plus is really coming in. The markets are ready to make all-time high levels, but beyond that, the markets will not be a runaway market for you to really make sense, but definitely quality stocks will continue to make money. But on the flip side, let me ask you that after the election verdict, do you see that the markets will make a top for this year?
Highly unlikely, Sakshi. I think if you look at the liquidity numbers, we are almost at 20,000 crores on a monthly basis. That's sticky money coming into the system every single month. On the other hand, if you look at the charts itself, we have been making higher tops and higher bottoms consistently over the last 1 year. And every single problem that we've dealt with, local and global, has been handled by the market with immense maturity. Yes. So I think India is in a sweet spot locally and globally. We continue to be one of the best performing markets in the world. Globally, markets are doing well. So I do believe that there could be some sell on news, very minor 2-3%, but I think the overall trend is intact. And even post the election results, one should stay committed. And for me, the line in the sand level is about 21,800 to 22,000. So as an investor, till those numbers don't break, you stay committed without over-analyzing.
Okay. So how are you positioning your portfolio, sir, at this point in time? Are you increasing cash levels to deploy further? Have you already started to deploy quite a bit? What is the tactical trade right now ahead of elections?
Well, we've been recommending to be 90% committed into the markets. 7-10% cash just for that odd opportunity that might come by, and that too may or may not be. But I do believe that volatility is unlikely, because in the last 7-8 days, the way the markets have made a higher highs, it's a clear giveaway that the market is setting up well. And if you look at the sectors itself, it's been a case of musical chairs in the last 4 years, because there is a time where one pocket does very well, then it takes a bit of a breather, and some other pocket takes the market higher. Look at what metals have done. We've been a big bull on it for the last 6 months now. And I do believe even from current levels, you'll see significant upside. So the 3 sectors that we like and where we recommend your viewers to stay committed would be metals, pharma, and FMCG.
Okay, wonderful. I did have all these questions for you with respect to certain sectors which have started to show the move as well. And you've named all these three which were on my top radar too. So within the metals pack, sir, I'd ask you, with the kind of runaway moves that we've seen in at least some of the stocks like a Hindustan Zinc, is there any risk of an overheating, or is there enough and more to go within this space? How should one choose their stocks there?
See, stocks like Hindustan Zinc have been in hibernation mode for years. Something similar happened in the PSU space, that they always had value, but nobody looked at them. They were always trading at single digit PE for such a long period of time. And when people realized that I'm missing an opportunity is when smart money gone in and got in, and there was a cascading effect on the upside. I think something similar has really happened in Hindustan Zinc and Hindustan Copper, because there are global tailwinds which are at play given the commodity prices, and they were always undervalued and under-owned. So while they might not be a fresh buy at these prices, because I think they run up a lot and you might want to just hold them if people are already long. But the bigger opportunity, I think, are in the top line stocks. I think JSPL, JSW Steel, Tata Steel, Nalco, and SAIL look very good to us. And I think all of these 4-5 stocks which I've mentioned could deliver anywhere between 20 to 25% over the medium term.
Okay, JSPL, JSW Steel, Nalco, SAIL, these are some of the stocks that you are bullish on, and investors can continue to build positions in this space as it may be. And of course, do you think that, sir, now that the Chinese markets have started to improve, this may have a much more longevity than was earlier expected?
Well, there are two sides to the coin. I mean, some people whom I speak to, they say that now China and Hong Kong are doing well. So do you think money will flow out of India and move to that market, which is also a valid argument? And the other side is because they are doing well, so it's a tailwind because global markets in general are doing well. I would go with the latter argument. I don't think money is flowing out of India anytime soon, because China and Hong Kong are just too volatile for a global investor to be committed in a very large way. But I do believe that the comeback on China will have a much positive bearing on number of industries in India. And therefore it will have an impact on stocks. So I think this comeback is good, and that's probably the reason we like metals and chemicals, which are globally driven, and therefore they have a tailwind.
Okay, I will ask you on chemicals also a little later, but let me just bring in the FMCG space, which has just started to move. Now we do know that the large caps like 4% on a one day. What is the kind of sense that you're getting here? ITC, you just talked about that it's after a long time, it's again coming back. Earnings will be reported today again. So probably this could be the stock that we need to watch out for. Dabas, Marico and Imami of the world have already started to move. Mostly the earnings commentary from the managements were pointing out to a rural recovery now and promising outlook on the monsoons that they are betting big on. How are you looking at this space? Where exactly should one concentrate their focus?
At a 22,700 index, you don't get many very good risk reward bets. And I think keeping that in mind, FMCG is right on top of the list. Because if you look at any other sector, when you look at the risk reward, you just don't get the confidence to go all out and buy them confidently. But I think FMCG is on the verge of a large breakout, which could happen anytime now. And I do see a large move on the index. I do see the index eventually moving towards a level of 50,000. So if you're booking profits in some other sectors like capital goods or PSU or auto, I think this is a good time to top up on FMCG and pharma. And within the FMCG space, I think ITC is good for a possible 50 to 100 rupee move from here. HUL is good for a 200 rupee move from here. So these are large moves in super quality stocks which have done nothing for many months and in fact many quarters. So I think this is a good opportunity, and this is also a low beta sector, low beta stock. So given the elections and given all the environment that we are in, it's good to have at least 7 to 8% of your portfolio in FMCG.
Okay, understood. So a large breakout could be in the offing for the FMCG space. Let's come to pharma now, sir. Which part of the pharma and the healthcare space are you now more bullish on? Is it the frontline pharma stocks, say a Dr. Reddy's, a Lupin, a Cipla, Sun Pharma, or are you looking at, say, the hospital majors which have actually shown some bit of a momentum in the recent past, say Apollo Hospitals, or maybe the diagnostic stocks, Metropolis Healthcare, Divi's for that matter? We've seen enough and more action in this space largely rather than the frontline pharma space. How are you advising investors to now participate in this move?
This can be understood in two parts. If you're looking at it from a slightly longer term perspective and want to go investment way, then I think the large cap pharma pretty much fit the bill. and it's been a classical uptrend for the last 2 years. In fact, the pharma index itself has been in a range for the last 4 months if you actually look at the charts, and we are at the upper end of the range. And if that breakout were to happen, I think the pharma index could see another 1500 to 2000 points upside, which is about 7 to 10%. So large cap pharma, clearly, I think the best is yet to come. And we continue to like stocks like Sun Pharma, Cipla, and Dr. Reddy's. That would be our preference from a medium to long term perspective. But the trading opportunity, I think, is in the diagnostic space because stocks like Metropolis and Dr. Lal Path Labs are coming out of months of underperformance, and we see a setup where we feel that a near-term trend could be in play. So there could be an opportunity, as I said, for the next 3 to 6 months. So play diagnostic for that time frame and play large cap pharma for the longer term time frame.
Okay, well understood. So both you have about a 6-7 stocks recommendation from within the pharma space, the frontline counters as well as the diagnostic chain majors too. Now let's come to, you did talk about trimming certain positions, say in a PSU or an auto or in capital goods. I remember, when I had spoken to you, I think about, 2 years back, you were one of the first people to say that we are going big on capital goods. So are you really trimming down your positions too in certain capital goods stocks? And what is it that you're going to be advising viewers now?
Well, Sakshi, firstly, thank you so much for highlighting that. Yes, indeed, we are in an industry where we are as good as our last call and we are as good as yesterday. But yes, 2 years back, we did speak about real estate and capital goods as the big story, and purely based on charts. We got an indication that things are looking up and the fundamentals followed, smart money followed, and now, global investment is also following in these spaces. I think from a near-term perspective, it's a little overdone. So we are definitely recommending taking profits across the board in capital goods. But if your view is to play the India story over the next 3 to 5 years, then please stay committed. I don't think there is an issue there. But if you're looking at 3 to 6 months, I think there are better opportunities in the market, and these sectors will now get into consolidation mode, even though they might be in a range, which is a huge opportunity cost in today's world. So my preference is other sectors, but long term, these sectors also look good.
But what about stocks like, say, an L&T or a BHEL, sir? How are you positioned now on these? There have been divergent views after the earnings on BHEL, at least that is somehow, unnerving some of the investors as well. So how would you really play these two stocks?
See, BHEL is momentum in my book, and I think it was undervalued, it was under-owned, it's played its part. All the positives are in the price. I think these are good levels to book profits. L&T, on the other hand, is a proxy to the India story. So if you're bullish on India, you have to stay committed in L&T. And I think we have it in our long-term picks for almost 2.5 years now when we initiated coverage. So L&T is a stock where you play test cricket. You don't play T20. You don't try to get in, get out on a daily basis because then you're going to get out very fast. So play test cricket in stocks which we believe are a proxy to India stories. And I think stocks like L&T fit the bill pretty much.
Okay, now I'll bring to you the sector that is consistently playing IPL, and that is defense and shipbuilders for that matter. There is no let up in the kind of rally that we have been seeing. Splits have happened, stocks have regained the pre-split levels, they are moving even further beyond. Every time we thought that this is enough and more done, there would be another surprise move, and this space has clearly created the maximum FOMO that one could have had in this space, in the defense and the shipbuilders space. Is it too late to take an entry into these stocks, sir?
It is very, very late to take an entry at these levels, but I think it's very, very savvy to be taking profits at these levels. I know you might miss a little bit of upside, maybe because the momentum is great, but these are levels to take some profits. At some point of time, you need to realize that I think it's a little overdone. So that's what we are recommending our clients to take some profits in railway and defense, more defense, less railway, because railway is still in some sense undervalued. And I think there is room for some more upside there. But okay. I think risk reward is really the key point at 22,700, which I don't see coming from defense.
Okay, so the risk reward may not be favorable to take a fresh entry in case you're looking at the consistent moves on, say, a Cochin shipyard or a Mazagon or an HAL or a BEL that consistently move higher at this point in time. However, if you've been there in the best of the rally, some profits off the table is something that you should be looking at. What about the PSU banks? How are you placed on that space? This story has unfolded strongly over the last 1 year or so. Is there more to go?
I think there is more to go because I think PSU banks came out of 10 years of consolidation. Many of these smaller PSU banks were available at 5, 6 PE, for a very long time and nobody even looked at them. And suddenly, everybody's talking about them and they are getting the kind of value which they deserved maybe a decade back. I think for me, on top of my list is SBI. I think I'm a big fan of SBI and I think just like L&T, you need to play SBI as the India story and the India proxy. Even from current levels, I see significant upside. It's been our call of the last 6 months. And I do see SBI trading at 1,000 and well beyond over the next 6 to 12 months. This is followed by BFB and Canara Bank. But given the rally in PSU banks, what we have done is we have started to take profit in smaller PSU banks and move it to larger PSU banks because even if there is volatility, they will handle it well. So that would be my call, that stay invested in larger PSU banks.
Okay, understood. But what about the large private sector banks which have just not moved at all? And, of course, the profitability metrics, a lot of them had reported strong in this earnings, but the stocks have just not been able to catch up in that kind of a move. Where are these ICICI banks, Axis, HDFC banks of the world really headed? Is there some kind of a light at the end of the tunnel that you're seeing here?
Well, there are two worlds right now because ICICI Bank has actually done very well if somebody had it in its portfolio. On the other hand, HDFC has done nothing for almost 3 years, and every single time there is hopes and there are even prayers that the stock does well because growth at any price as a concept has just not worked in the last 3 years, and I don't think it's going to come back anytime soon because this has become a value market and everybody is chasing value. Momentum is chasing value. So I think this is a market where you stay with stocks, which have shown relative strength. So for us, ICICI Bank is still on top of the list. Kotak Bank is an avoid. HDFC Bank, I know that there is not much downside, but when the upside would come, I do not know. So if you are somebody who can actually wait out a year, I think HDFC is a good buy at these prices. But if you are somebody who's looking for momentum and relative strength, still go with ICICI Bank.
Okay, got that. So that's the private banks out of the way. Mid and the small caps, how are you looking at this story? Mid caps are continuously hitting record highs after a bit of, some nerves stepping in after SEBI chairperson really talked about froth coming in these two pockets. But what is the story looking like from here on for the broader markets?
See, what's happening in mid caps and small caps today has never happened in the history of Indian stock markets because you're looking at 8-9 thousand crores of mutual fund money that's coming into these pockets every single month. This has never happened in the history of Indian financial markets. So you can't use the data of 15 years back to say what should happen today. Because I think the liquidity angle has changed the game completely for mid caps and small caps. My take is that they are still not very expensive. I think mid caps or small caps are now getting their due. A lot of large fund managers are now deploying a lot more capital in mid caps and small caps because large caps are pretty much understood and Nifty does not give you serious returns because I think it's fairly well priced at a 24p. So keeping that thesis in mind, if you are sticking to quality mid caps and small caps, I think there is still outperformance at play over the next 6 to 12 months. But anything that is substandard is extremely risky to commit into. So stick to A grade mid cap, small caps, you'll still do well.
Okay, understood. And last question to you, sir. Which will emerge as the stock of the year?
Well, I still feel that the stock of the year is going to be SBI. I think I've been a big fan of that stock. I wouldn't be surprised if the stock delivers 30 to 50% upside from here. And second stock, which was my favorite a year and a half back at 200 rupees, which was ITC. We played the entire rally to 500, then it got into a correction. I think from here, 7% to lose, 50% to gain. So I think I'm actually betting for a 50% move on ITC, hopefully over the next couple of years if everything goes as per plan.
Okay, wonderful. Well, on that note, thank you so much, Gautam sir, for being with us on this special edition and sharing such wonderful insights with all our viewers. Viewers, we'll promise you that we'll cut out chunks for you and we'll play it across social media, because each of the answers, that you've got from Gautam sir in this video is a notebook in itself that should be referred to in case you want to play the markets in this current time. Truly appreciate your presence, sir, on Business Today, and here's hoping to have more of you on our shows going forward from here.
Thank you, Sakshi. Thank you.
Thank you so much. And viewers, with that, we will wrap up this special edition. You've got the stock of the years as well. So SBI will be the stock of the year and ITC will be the second top favorite that Gautam sir has talked about in this year, in case you really want to play this rally. And from here on, if you want to reap in at least a 50% more kind of a profit, that he's betting big on ITC. So listen in to all these wonderful advices. Take it down, in a piece of paper. Remind yourselves how exactly do you want to protect your profits as well as make more money in the stock markets. I'm sure that you would have enjoyed this conversation as much as I did on Market Guru. But do stay tuned as Daily Calls comes in next, which will answer all your stock related queries as well. So start writing into us. The WhatsApp number will be flashing all across our social media platform and on our YouTube channel as well. See you in just a bit.
Hello, Namaskar. You're watching BT TV. I'm Tanya Neja, and this is going to be a very special episode because